Hello students, welcome to my channel Khan's Commerce Tutorial. I'm Hashim Ali Khan here. So we are discussing the subject cost accounting. In the cost accounting, contract accounting, already I think you have already watched the theory video of contract costing and the starting short problems as well as 11 long problems, main problems we have done. So if you are watching regularly, then definitely you can be able to gain a lot from these videos. Hope my viewers are continuously watching these videos. So now I'm going to start the next problem, that is problem number 12. But I expect my viewers to have a hard copy of the problems from the link under my description. So keep the problems ready. Now we'll start the next problem, that is 12th problem. Engineer Limited undertook two contracts on 1st April and 1st July respectively in 1972. Their account showed the following position on 31st December 1972. This is the first problem where we are having two contracts. The contractor has started the first contract on 1st April and the second contract was started on 1st July and the accounts are closed on 31st December. So how many months? The first contract was started 9 months from 1st April to 31st December. Second contract from 1st July to 31st December, 6 months. Now, the data is given: contract 1, contract 2. Contract price 1,20,000, first contract. Second contract 1 lakh. This is the contract price. Then work certified 80,000, 64,000 directly given in the problem, no need of any calculations. Work uncertified directly given. Then materials, wages, general expenses. These material, wages, general expense will be taken on the debit side of contract account. Cash received in respect of work certified. Then wages accrued, general expenses accrued. Accrued means outstanding, due but not paid. So while taking the expenditure, we should take all expenditure, whether paid or not paid. Even if it is outstanding, we should take. So wages and accrued wages will be added together. Similarly, general expenses and accrued general expenses will be added together. Then plant installed. Debit side, we take the plant installed. Material on hand at the end of the year, credit side. Then on the respective dates of the contract, the plant was installed. Actually, the plant was installed on the date when the contract was started. That is 1st April and 1st July. Depreciation thereon being taken at 15% per annum. So we have to charge depreciation at 15% per annum on the plant. Write up the accounts in the ledger account, in the contract ledger, and ascertain the profit and loss account on each contract. For each contract, we have to find out the profit. Indicate the amount that should be transferred to P&L account for the year ended 31st December 1972. How much profit should be transferred to profit and loss account, that we have to find out. Come on, now we'll start our solution. Engineer Limited contract account for the year ended 31st December 1972. In columnar form, we'll make two columns on debit side, two columns on credit side. Contract 1, contract 2. Here also contract 1, contract 2. Debit side 2 columns, credit side 2 columns. Now, debit side to material, respective material we have taken for contract 1, contract 2. Wages paid and accrued, I have combined. In the problem separately it is given wages paid and wages accrued. I have combined together. The total wages paid and accrued will be 45,400 for first contract. Second contract 46,500. General expenses paid and accrued, again I have combined the paid as well as outstanding. It will become 2,200, 1,500. Plant installed, the cost of the plant at the time of starting of the contract 8,000, 6,000. All the debit items I have taken. Now I'll come to the credit side. By work in progress, work certified given in the problem, work uncertified given in the problem, same I have copied. Now material on hand at site, at the end of the year some material was unconsumed, unused. That material 1,400, 1,520. Now plant at site at the end, working note. Now we have to find out what is the value of the plant at the end of the year after depreciation. Depreciation is to be calculated at 15% per annum. It is given in the problem. Now how to calculate the value of the plant at the end of the year? Here see the working note. Value of plant on 31st December 1972. Plant 1, first plant. Cost of the plant on 1st April 1972 at the time of starting of the contract. The value of the plant was 8,000. Here you can see 8,000. This 8,000. Now during the year up to 31st December 1972, how many months? From 1st April to 31st December, 9 months. So we have to calculate depreciation for 9 months. Less depreciation up to 31st December, 8,000 into 15% into 9 by 12, you will get 900. So 9 months depreciation 900. Subtract 8,000 minus 900, 7,100 is the value of the plant on 31st December at the end of the year. So I have taken here plant at site at the end is 7,100. This is the 7,100. Similarly, second plant. The second plant cost was 6,400. Here we have taken 6,400. But the 6,400 was on 1st July 1972. The second contract was started on 1st July. So less depreciation up to 31st December. How many months? July, August, September, October, November, December. 6 months. So for 6 months we need depreciation. So 6,400 into 15% into 6 by 12, 480 is the depreciation. Subtract 5,920 is the value of the plant in the second contract. Here I have taken 5,920. Or so we have taken all the credit items. Now we have to see there is profit or loss, notional profit or no loss. So in contract 1, the credit side total is more. The credit side total is 90,900. From 90,900 I have subtracted 1, 2, 3, 4 values. The 4 values I have subtracted, the balancing figure is 6,400. This 6,400 is the balancing figure and this is the notional profit. This 6,400 is the notional profit, and this notional profit will be divided between profit and loss account and reserves depending on percentage of work completed. That will do it in working notes. Now second contract, in second contract debit side is more, credit side is less. So we are having loss. The whole loss should be transferred to profit and loss account. There is no notional loss. Profit raha to notional profit. When there is loss, it is completely lost. The whole loss should be transferred to profit and loss account. So debit side total, if you find, you will get 77,400. From 77,400, I have subtracted 1, 2, 3, 4 items. These 4 values, amounts I have deducted. The balancing figure is 2,760. This 2,760 is the loss, and it will directly transfer to profit and loss account, balancing figure. That's all. So only in the first contract we have profit, second contract we have loss, so transfer. So notional profit carried down, brought down, first contract. Now we have to find out how much profit will be transferred to profit and loss account, how much will be transferred to reserve. Now we have to find out how much percentage of work completed. Profit to be transferred to P&L account, percentage of work completed, work certified by contract price into 100. Previous problem also we have applied this formula to find out percentage of work completed. So work certified is 80,000. Contract price is 1,20,000. Contract price given in the problem 1,20,000. So percentage comes to 66.67%. So it is more than 50%. The work is completed more than 50%. So 2/3 of the profit should be transferred to P&L account. Since the work completed is over 50%, so profit to be transferred to P&L account is notional profit into 2 by 3 into cash received by work certified. Percentage of cash received is not given. So we can apply this formula, we'll get the same answer. So here 6,800 into 2 by 3 into cash received, it is given in the problem cash received 60,000. Given first contract. So 60,000 cash received, 80,000 work certified. Work certified 80,000. So 3,400 rupees will be transferred to P&L account. So 6,800 versus 3,400 transferred to P&L account. Balancing figure 6,800 minus 3,400, remaining is 3,400. This will be transferred to reserves. That's all. This is the new problem in which we have 2 contracts. So in one contract itself, one account itself, we have prepared 2 columns for contract 1, contract 2. Like this we can be able to find out the profit. So this is the end of problem number 12. Come on, now we'll start the next problem, that is problem number 13. Come on, see the 13th problem. 3 contracts commencing on 1st January, 1st July and 1st October 1980. The previous problem we have seen 2 contracts, but here 3 contracts are started on different dates, 1st Jan, 1st July, 1st October. were undertaken by a contractor and their accounts on 31st December 1980 showed the following. The accounts are closed on 31st December. So up to 31st December, what is the position? Contract number 1, 2, 3. Contract price 4 lakh, 2 lakh 70,000, 3 lakh. And expenditure are material, wages paid, general charges, plant installed. All these will be taken on the debit side. Then material on hand, credit side. Wages accrued will be added to wages. Work certified is given in the problem for all the 3 contracts. Cash received in respect thereof. Work finished but uncertified work. The plant is installed on the date of commencement of each contract. Depreciation thereon is to be taken at 10% per annum. So on each plant, 10% per annum should be depreciation provided. Prepare contract account in tabular form. This is the first problem where it is not asking you to make the account debit and credit side. It is asking you to make it in a tabular form. The 3 columns we have to put in the extreme right hand side. On the right hand side, we make 3 columns: contract 1, contract 2, contract 3. Now you can see the solution here. Contract account for the year ended 31st December 1980, contract 1, 2 and 3. There are 3 columns at the extreme right hand side. First, we are taking work in progress. So whatever we are taking earlier on credit side of contract account, whatever we are taking, those credit items I am taking first. So work in progress, work certified, work uncertified. For each of the contract, how much is the amount given in the problem? Then material on hand at site. At the end of the year on 31st December, how much is the material unconsumed at the site? That is material on hand. That we will take it 4,000, 4,000, 2,000 given in the problem. Plant on site at the end. When the contract was started, plant was installed and depreciation will be calculated 10% per annum. Now we have to find out what is the value of the plant at the end of the year, that is 31st December. In working note, we calculate what is the cost of the plant and how much depreciation we have provided. After deducting depreciation, what is the value of the plant? This will calculate in working note. Then expenditure, material are respectively given for the 3 contracts, wages paid and accrued. I have added wages paid as well as accrued, both together combined. Then general charges, plant installed. It is given in the problem at what value the plant was issued at the site. So the total of the expenditure. So first we will take total of work in progress, then total of expenditure, right? So how much is the plant at site? I will see first. We'll see the working note here. Working note, value of plant on 31st December 1980. Plant number 1. Plant number 1, the value, the cost on 1st January 1980 was 20,000. The first contract was started on 1st January 1980. So at that time, the value of the contract or the value of the plant was 20,000. Less depreciation up to 31st December 1980, end of the year. So for 1 year depreciation, 20,000 into 10%, 2,000. Subtract 18,000 is the value of the plant in first contract. So I have taken here 18,000. Plant on site at the end is 18,000 for contract 1. Now we come to the contract number 2. Plant 2. Cost on 1st July 1980. The second contract was started on 1st July. So on 1st July, the value of the plant was 16,000. Now depreciation should be provided only for 6 months because it was installed on 1st July. So from 1st July to 31st December, 6 months. So 16,000, 10%, 6 months, 800. 15,200 is the value of the plant on 31st December. This is for second contract. So 15,200 I have taken here. Right? Now plant number 3. Cost on 1st October 1980. The third contract was started on 1st October. So October, November, December. Only 3 month depreciation we have to calculate. So 12,000 into 10% into 3 by 12, 300 rupees depreciation. So 12,000 minus 300, 11,700 is the value of the plant on contract 3, 11,700. Now take the total 2,28,000. From 2,28,000 subtract expenditure 2,10,000. So notional profit we got 18,000. 18,000 rupees is the notional profit. 228 minus 210. So 18,000 notional profit. Now out of this notional profit, some profit will be transferred to P&L account, some profit transferred to reserve. That depends on the percentage of work completed. Now I am showing it in working note here. Profit to be transferred to P&L account. Contract number 1. Percentage of work completed, work certified by contract price into 100. Work certified is 2 lakh and the contract price is 4 lakh. So it comes to 50%. So 50% of work is completed. So profit to be transferred to P&L account is 2/3. Notional profit into 2/3 into cash received by work certified. Notional profit 18,000 into 2/3 into cash received. For first contract in the problem it is given cash received 1,50,000 by 2 lakh. So 9,000 rupees is the profit to be transferred to P&L account. So 18,000 में से 9,000 rupees transferred to P&L account. Remaining 9,000 rupees transferred to WIP reserve. That's all. This is for contract number 1. Now we'll come to contract number 2. In contract number 2, 1,87,200 minus 1,93,200. Expenditure is more. So we will have a loss. We don't have a profit. We have a loss of 6,000 and complete loss of 6,000 should be transferred to P&L account. Complete 6,000 rupees should be transferred to P&L account, no transfer to reserve. That's all. So we have given in second note. Contract 2, there is a loss of 6,000, so the complete loss of 6,000 is transferred to P&L account. Now we'll come to the third contract. Contract number 3, 51,700 minus 49,000. You are getting 2,700 as the notional profit. Expenditure is less. So we are getting notional profit. So out of 2,700, we have to transfer to P&L account and reserve. Now we'll see how much transfer to P&L account. Percentage of work completed, work certified by contract price. Work certified is 36,000, you can see here. Work certified is 36,000 and the contract price of the third contract is 3 lakh. So 36,000 by 3 lakh into 100, 12%. The work completed is only 12%. That means below 25%. So no profit should be transferred to P&L account. The whole profit should be transferred to reserves. Here I have written, since the work completed is below 25%, so the complete notional profit of 2,700 is transferred to WIP, that is reserve. No profit should be transferred to P&L account. Already in the theory session, I have explained you the rules regarding the profit to be transferred. अगर 25% से कम up to 25% भी अगर work complete हो गया तो no profit should be transferred to P&L account. So the whole 2,700 rupees should be transferred to reserve. Nothing is transferred to P&L account. So this is the first problem where we have prepared the contract account in a tabular form, in a table form. We don't have any debit and credit. The only thing is whatever credit side we have taken earlier, those credit side first we have taken. That will be treated as A, and debit side expenditure what we have taken, that we have taken as B. So A minus B is the notional profit. From this notional profit we distribute between transfer to P&L account and transfer to reserve. That's all. So this is the end of problem number 13. Come on, now we'll start the next problem, that is problem number 14. See the problem carefully. Prepare contract account from the information given below. Here the data is given for 1988-89 and 1989-90. So successively for 2 years the same contract is continued. First of all, the contract was started in 1988-89 and the contract was finished in 1989-90. So 2 consecutive years the contract is going on. So that is a new point in this problem. Material in 1988-89 3 lakh and 89-90 84,000. So material are used in the first year as well as in the second year. Then wages first year 2,30,000, second year 1,05,400. Outstanding expenses 35,000 first year, 15,400 second year. Material on hand at the end 13,000 first year, 7,000 second year. Cash received is 6 lakh rupees in the first year and 10 lakh rupees in the second year. And certified completion of work. And how much work is certified, completed? 75% in the first year, 100% in the second year. That means the contract is finished, completed in the second year. 100%. And how much cash received? 10 lakh. 10 lakh rupees is the cash received and 100% work is completed. That means the contract price is 10 lakh. It is a hidden point. Specifically, it is not given that the contract is for 10 lakh rupees. It is not given that the contract is for 10 lakh rupees. It is given that the second year 10 lakh rupees are received from the contractee and 100% work is completed. That means the contract price is 10 lakh and first year completion was 75%. 75% of the contract was completed. So 75% of 10 lakhs, it comes to 7,50,000. The work certified in the first year is 7,50,000. Right? That is the problem. Now first year, we have to make two separate accounts. First we make the account for 1988-89, first year. So contract account for the year 1988-89. Debit side we take the material 3 lakh, wages 2,30,000, outstanding expense 35,000. Credit side by work in progress, work certified, 75% of 10 lakh because the contract price is 10 lakh. 75% of 10 lakh, 7,50,000. Work uncertified is not given. Material at site at the end. At the end of the year, how much is the material unused at the site? 13,000. Take the total of the credit side, 7,63,000. Subtract the three amounts, will get the notional profit, 1,98,000. This is the notional profit. Now by notional profit brought down, 1,98,000. Now we have to distribute between P&L account and reserves. That will depend on percentage of work completed. Now there is no need to find out the percentage because percentage is given in the problem. 75% of the work is completed. It is given 75%. That means more than 50% work is completed. So two-third of the profit will be transferred to P&L account. So since 75% of work is completed, so profit will be transferred to P&L account is notional profit into 2/3 into cash received by work certified. Notional profit we got 1,98,000. 2/3 cash received. In the problem it is given first year cash received is 6 lakh rupees. Cash received 6 lakh and work certified is 7,50,000. Here we have calculated. So it comes to 1,05,600. So out of 1,98,000, 1,05,600 will be transferred to P&L account. Remaining balance 92,400 will be transferred to reserve. That's all. This is the first year's contract account, 1988-89. Now we'll come to the second year. Contract account for the year 1989-90, second year. And in this year, the contract is finished. When contract is finished, we are not going to take work in progress. Now see here, the closing WIP of first year will become opening WIP of the second year. Remember this point. The closing WIP of first year will become opening WIP for the second year. So how much is the closing WIP here? Work certified 7,50,000. Work uncertified is not there. This is the closing WIP of first year. Now this will be taken on the debit side of the second year. So second year mein debit side, first we take opening WIP. This is nothing but closing WIP of first year. So to WIP, work certified 7,50,000, work uncertified not given. So 7,50,000 less reserve. How much we have transferred to reserve to WIP during the first year? 92,400. तो WIP यहाँ पर 7,50,000 है, उसमें से ये 92,400 सब्ट्रैक्ट कर देंगे, रिजर्व से ये. तो 7,50,000 minus 92,400, 6,57,600. This is the opening WIP of second year. To this we take material issued 84,000 given in the problem. Second year material consumed is given. Then material at site. See here, at the end of first year, some material was lying unused at the site. How much is the material at site at the end of first year? 13,000. तो पहले साल के एंड में जो मटेरियल बड़ा हुआ है साइट पर वो सेकेंड ईयर में यूज हो गया, तो फर्स्ट ईयर का जो क्लोजिंग स्टॉक था सेकेंड ईयर का ओपनिंग स्टॉक हो जाएगा. तो ये मटेरियल कंज्यूम 13,000 will be taken on the debit side. Then wages 1,05,000, outstanding expense 15,400. Now credit side by contractees account. See here, when the work is finished, when the work is completed, the entry will be contractees account debtor to contract account. जब काम कंप्लीट हो जाता है तो उसके बाद जो जर्नल एंट्री पास करते हैं contractees account data are to contract account. So contract account is credited by contractees account 10 lakh. We should not write work in progress. जब अभी काम कंप्लीट नहीं हुआ तो वर्क इन प्रोग्रेस, काम कंप्लीट हो गया तो बाय कॉन्ट्रैक्ट ही 10 लाख. बाय मटेरियल एट साइट एट द एंड, पूरा कॉन्ट्रैक्ट खत्म होने के बाद कुछ मटेरियल बचा हुआ है, 7,000 रुपीज मटेरियल वाज एट साइट. नाउ टेक द टोटल ऑन द क्रेडिट साइड 10 lakh 7,000. From 10 lakh 7,000 subtract these 5 items. Subtract all debit items. You will get the balancing figure 1,32,000. This should be entirely transferred to P&L account. It should not be called notional profit. Remember, notional profit will be there whenever the contract is incomplete. अगर contract finish नहीं हुआ तो WIP, notional profit. That will be transferred to notional profit. Here contract is finished. So entire 1,32,000 should be transferred to P&L account, profit and loss account. So to profit and loss account balancing figure, that's all. So again, previous problem and this problem are entirely different. In this problem, same contract is running from 1 year to another year. That's it. The thing you have to remember is the closing WIP of first year will become opening WIP of the second year. The closing stock of material at the end of first year will be consumed in the second year. That you have to remember. That's all. So this is the end of problem number 14.